Hello, we are here to develop a financial planning for service, and here we have the user guide. You can read how to develop it, fill in annually, in field, Angela, set, so on. So we insert here the previous last year, and here you insert the here we wanted to start a business. Here is 2030, but it could be 20, 2021. Accordingly, here we inserted the expected annual inflation will change. So the discount rate is 11%. It is according amount of investment, but now we don't have the amount of investment. We will do it later. So here is sales volume. Here sales volume 5,000 units, or could be 9,000 units, and then according the size of the market, the size of the behavioral segment. The behavioral segment could be, for example, 1,000 people, 1,000 people, okay, and the VAT 16%, but not now because it depends if the amount of if the revenue is at least 1 million rands. Now is the working hours calculations. The most calculation here are made automatically. All these calculations are to get to know how many hours are worked per month, and you just needed to fill the number of the days respectively to work days, Saturdays, Sundays, and holidays in work days. You must to insert here the number of hours per week related to working shift, and you must insert the number of the days related to working days per week, including Saturdays. Then we have here the investment table. For example, it's a service. You need an office. Yeah? You need an office. Office, okay. Provide any service like what service? What service? Internet provider, for example. And the quantity of office, one office. This office costs how much this office? Small office, mm, 50,000. Small office, mm, and 50,000 rents. Now we go to the financing sources. Here it's 50,000. Okay, you can put here 40,000 of equity capital, and here bank loan 10,000 rents. The discount rate is 10%. Okay, 50,000. Okay. Now we go to the financial planning here, and we can change the margin. We can put 25%. But firstly, insert here you calculate the variable cost. You insert here the green files consumption of direct material services. You insert here. It's 100% direct labor cost per service, 50 rands. Insert in the file and the green files. Okay, insert this value additional expenses per service, number of hours to produce, okay. Then automatically the unit price come here, and um, and um, and fixed costs. Here there are hyperlink to the indirect labor. You go there and you fill the files. For example, here you fill the files. There are one accountant. You right here and right here, and here is the income tax. Yes, all this here. Third party supplies. You click the hyperlink, you will see how the values here. Okay, insert it. Okay, same thing for amortization and depreciation. Okay, depreciation of equipment. For example, computers. On computer, battery cooling, restoration. Okay, and office. Okay, depreciation of office. This depreciation is 50,000 and 5 years. Go here. Okay, the project is unviable now. So let's try increase the price. Increase the price. Or we'll try to reduce what the costs. I will try increase the price. Okay. Okay. Project is viable. Net present value is positive, and minimum quantity to sell is 148 units. Minimum above this price, 144 rands. There are profit. Okay, and yes, and now this table. This is a monthly cash budget. You can compare the items budgeted with actual performance items budgeted and see the variation here. Same things to the daily cash budget. You have here the optimistic scenario. You increase here the taxes for sales volume, operating costs. You increase the tax and you will see if there are loss or gain. In the optimistic scenario, the percentage you insert here mean grow the sales, grow the revenue. The operating cost, the percentage increase it, you are saying the costs are decreasing. In the pessimist scenario, if the tax you insert here are decreasing the revenue, and the tax you insert here are increasing costs. Okay, thank you very much for watching.